Good morning, traders. Sorry about the delay there. It seems like we had a little bit of issues with our streaming platform, but we are ready to go and get this morning started. Welcome to Pre-Market Prep, where you guys get everything that you need to get your trading morning started. Let's talk about today's topics. We're going to talk, of course, about Amazon Care no longer being offered, Tesla 3-for-1 stock split, Nvidia, disappointing earnings. We'll see what happens there. Snowflake getting a little bit of a beat here. We'll definitely take a look at Snowflake. CRM, Salesforce coming through, Splunk, Dollar General, a little bit of talk on Peloton, and of course, we'll take a look at the GDP numbers that come out. Initial jobless claims today, 8:30. Don't miss that. And of course, we got our guest, Ivan Feinseth, partner and CIO at Tigress Financial Partners. Welcome to the show and welcome to Pre-Market Prep. Let's get it started. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your hosts, Joel Elkanin.
This is a volatile puppy here, isn't it?
And Dennis Dick.
I'm bidding a penny. I'd buy that stock for a penny.
With everything you need to start your trading day. Good morning, traders. How we doing, Dennis?
I'm doing okay. I had a very interesting evening of trading. We'll say that. It was interesting evening. I was.
Why did we pop?
What's that?
Why do we pop overnight?
Why not? I mean, we're basically, we've sold off for a few days.
Why not?
Why not? We're just choppy still here. I mean, Jackson Hole, maybe people are a little bit, looking at situations saying, well, we've kind of oversold. Maybe it's going to be one of those sell on, rumor buy on news type events, obviously with Jackson Hole. And we also have Powell going to speak tomorrow. So, and then we got a lot of economic data coming in. So who knows? Could be some shorts, getting in here and covering ahead of it. Could be Tesla driving the bus a little bit here today. Nvidia is not driving the bus at all. So, which happened last time too. Nvidia actually disappointed there when they did their warning and the stock market bounced back. So maybe we should have known when Nvidia disappointed that the market was going to bounce. One of those things. But anyways, I want to go into what happened last night here, Mitch.
Let's do it.
So I'm sitting here and I'm trading. And then I had a few minutes and I'm trying to move. We're moving into the house here like right now in between. So I'm basically trading, moving. So I wanted to unhook my trailer. So actually I want to go hook my trailer up to my truck. So I'm trading and it was like in between. I think Shep was coming on. It was like 7 o'clock and it was slow. So I'm like, I'm going to go hook up my trailer. So go hook up my trailer. As I'm hooking up my trailer, I see this shadow because it was sunny. See the shadow, and I was like, oh, looks like a wasp, a shadow. So I'm looking, I was like, oh, the shadow just disappears. I'm like, oh, wasp, I guess just is gone. So okay, so I don't think anything of it. Hook up the trailer, come back inside, sit down, start trading at my desk again, and then all of a sudden, bam, stings me in the stomach. In the stomach, it was under my shirt. So literally the wasp was flying around and crawled on me and crawled up my shirt and underneath my shirt. So anyways, I lift up my shirt and then the wasp comes out of there after it stung me in the stomach. And then it's flying around and I have this little office here at my rental because I haven't moved my trading operation over to the new house yet. So it's a small office and the wasp is like mad. And then it's like flying around the small office trying to sting me again, like dive bombing me. So then I'm like, okay, I'm getting out of here. I don't have anything to kill. So I close the door and I lock him in there. So now he's locked in my office, but I got to trade. So I'm like, okay, well, we're in the process of moving. So I don't have any
wasp or trading here.
No, I know. And they're stinging you. Eh? So I don't have any wasp killer because we're in the process of moving. There's hardly anything left in this house. So I'm looking around. What do we have? I got a broom. I literally have a broom. So I'm reaching in the little room. Yeah, just like that. Reaching in. I swat him out of the air, knock him down. He's down. I just go to hit him. I hit him. And then he gets up and starts flying around again. I smoke him with
survivor.
The he's a survivor, man. So then, anyways, I swat him again. I hit him against the wall, and he coming at me again. I'm like, I can't kill this thing. So I'm like, I need something better than a broom. So then I go to my shed, and my kid's got a butterfly net. I'm like, okay, butterfly net should do it. So then, I'm reaching in carefully in the room. He's still like mad because I've swatted him twice. Already stung me once. Then I get him in the butterfly net. And then I finally get him outside and then take him outside.
Look at you using the butterfly net.
Yeah, the butterfly net worked.
I
So
know
then he's
all
outside the office. The whole affair probably took about 10 minutes, but it felt like an hour, especially after getting stung in the stomach. That's a sensitive spot.
Yeah, man. I sometimes I have to call on my inner Viking, I say, and I'm like, it's time to kill. Let's go.
I tried, man. That was a tough wasp. He was a beefy wasp. Yeah. He must have been under my shirt for 5 minutes, man. Because I was like, I went outside, the shadow disappeared. I hooked the trailer up. I came back inside, and I'm sitting there, and I'm just trading away, not thinking anything of it. I never even thought about the shadow again until bam, I'm like, what? And then I lift up the shirt, and he flies away. I was like, you got me. So,
well, I'll tell you
it's
what.
not fun getting stung in the stomach.
I'll tell you what. Well, you could have used the Amazon Care, but it won't be around for too much longer, Dennis. You can use a little bit of Amazon Care. Why not, right? A little teledoc.
There you go. I could have got to their telehealth.
You could have got to the telehealth here, right? And so let's go
Good
ahead.
Segue, Mitch. I like that. Look how he uses these segues. This guy's getting good, man.
All right, let's get into it.
Amazon.
Amazon Care shutting down after December 31st. Amazon Health Services Senior Vice President said the decision to shutter Amazon Care wasn't made lightly, only became clear after many months of careful consideration. This was reported by GreekWire. Now you're starting to see different stocks move off of this. Of course, pay attention to the relationships there. Teladoc, Amwell gaining as Amazon plans to shut down the telehealth service. Last month, though, it's interesting. Amazon said it was acquiring the One Life Healthcare, which was 1M. So if you want to look up that ticker, that's literally 1M. And so you've probably seen that up a little bit in there in the pre-market. And this one operates under One Medical, and they did this acquisition for $3.9 billion. It's interesting because One Medical also provides primary care services in person as well as virtually. So that can be some area that they might be able to transition into. Just kind of mentioning what's going on there, but take a look. Also, Teladoc is going to be definitely one to kind of keep on watching.
Yeah, trading up immediately on this news. So last night, Teladoc starts blasting off, and I was like, something's up. Like, I mean, when you're trading after hours, you can tell, when somebody's just excited, or when there's news. And when there's news, it's like bids jumping. You can really tell when there's something news. It's like, Teladoc, something's up, and then you see the Amazon headline, like, and that makes sense. So Teladoc, obviously, trading up 2 points here. Kathy going to benefit a little bit from this here. If we look this morning, ARKK is trading higher here this morning as well. I think it's throughout all her funds. So all of her funds are probably going to be up a little bit because I believe Teladoc is was it number 3? Kathy Woods, I think.
I'll take a look into it. I'll take a look at the holdings.
Yeah,
it goes number
Zoom.
3.
It might even be number 2. It's high. Like Tesla.
No, number 2 is Zoom. I know that one.
Number 2 is
Tesla, Zoom.
I think it might be number 3.
Yeah, you go
on
down.
Her major holdings, but it's 4 or 5% in the majority of her funds. 3, 4, or 5% depending on the fund. So it's big holdings. So actually, ARKK is probably going to be trading higher, and it is. So if you look at all her ARKK,
T-Doc is actually now in 1, 2, 3, 4, 5, 6th place for her in the ARKK.
It's slipping because it's fallen in price.
Mm-hmm.
Yeah.
So the third one is Roku, Square, CRISPR is actually higher than T-Doc. It's 4.59%.
Look, there's a pretty good stock. That's not one that's sitting at the lows. What's she doing in that? That's been one that's come off the lows.
These have been kind of moving together. She also has Fate and Beam, and they're all in kind of the similar area. So I kind of keep watching on all those. Beam, CRISPR, Fate, all these together. They're all in Kathy stocks. But let's get back to T-Doc. What's the other one? You also, Amwell, what's the ticker for that one?
AMWL. That's trading up 5% here. So you're getting a little bit of a lift here. I know some people on social media were talking about this one. I don't follow this one closely. But the 3 that were jumping out at me was like the Teladoc, definitely the Teladoc. The Amwell is up on it, I believe. And then there's GoodRx too, GDRX. I don't know if there's news on that, but I saw it moving. So I'm like, well, it's probably off the Amazon thing too, maybe. So GDRX trading up about 5% here as well. That GDRX chart, holy cow, look at this 6 support level on this one. I haven't looked at this chart in a long time. Wasn't this a Kramer darling at one time? I don't know if it was or not. Maybe I made that up. But $6, June, July, August, major support down here. So interesting here. Had the little short squeeze, it looks like, back in just about 10 days ago, and it got up to 10. Back at support at 6. So it's kind of an interesting level.
All right, let's keep moving on. I know everyone wants to talk about what Tesla's 3-for-1 stock split. Let's get into it. Let's see what happens now with Tesla.
Looks weird.
You know what's funny, Dennis, this morning, and it's not to make, Ember look bad, but he just kind of mentioned it to me. He was just asking me, he was like, what happened to Tesla's market cap? I guess his, the platform, sometimes they don't calculate correctly. And it was coming down. He was like, yo, what happened to their market?
Tesla becomes such a cheap stock.
Yeah. I was like, yeah, that's exactly how a lot of people are waking up today. They're like, what happened to Tesla? Well, it was just a stock split here now. So
3-for-1. 3-for-1. So it's trading post split here now. You also had a Ron Barron, one of the biggest Tesla bulls, out on the street on CNBC talking Tesla for the last 2 hours, or at least an hour. I saw him on there. I had it on mute, but I saw him on there. $303, trading up 2%. We talked about this trade potentially ahead of it. It did obviously have a couple days. It is up still again here today. Now, I will say typically what happens, I'm not saying it's going to happen, but typically you see these things kind of open high on the day of a post split and then leak and start to leak. So you have everybody excited, oh, Tesla's cheap again. Now, Tesla's its own animal. It doesn't have to follow the quantitative, methods that we talk about. But from a quantitative perspective, when I'm looking at splits, stocks tend to be strong pre-split and weak post-split. So we will see. Usually they open kind of strong on the day because you have, what happens is sometimes, and there's some brokerages that don't adjust orders and they just screw it up, and you have some orders that might actually lift the price too, but you have more people just excited. Tesla's down here at $300, a cheaper stock, let's buy it, it's going back to 900 type deal. I think that will subside. Obviously Tesla moves with the overall market too, but you can see it's up 2% here right now, so showing some good relative strength relative to the S&P, but just be cautious here chasing this because historically they do show weakness after they split.
All right, let's move forward. Let's get to Nvidia, top earning stock of the day, and it got hit in after hours, but it seemed like the market really shrugged it off. But let's talk a little bit about what came out here. Q2 adjusted EPS at 51 cents. Well, let me actually give you guys the banner there. Gotta switch it over there. All right, let's go to Nvidia here. EPS at 51 cents, missing the $1.25 estimate. Sales at 6.7 billion, missing the 8.1 billion estimate. Gaming segment revenue was at 2.04 billion, declined 33% year over year, and a 44% drop from its first quarter. Nvidia now guiding for the third quarter revenue of 5.9 billion. Plus or minus 2%. That's about 15% lower than expectations. So lowering the guidance. The company sees also gaming and professional visualization revenue declining. Several partners reducing inventory levels ahead of Nvidia's new products. The company's gross margins have now been dropping massively in the last year from 67% to 46% in this last year. And profits are now back to levels in early 2020. With a 50-cent EPS range, this is when Nvidia was trading as low as $50 back then. Yeah. And now Nvidia trading at $166. That's a little bit, close to more than 80 times Q2 earnings.
Yeah, so the quarter they just reported, and obviously they're looking, that they're going to be coming up from there a little bit, but the guidance is not good. So when you think about this, even if you give it on a forward basis, let's say conservatively, it's trading like 39, 40 times, on the forward basis from the new earnings. It's expensive, man. And I mean, it is Nvidia, it is best of breed. But again, it's a chip that the business is very cyclical. Mm-hmm. So, are we going to need Nvidia chips in the future? Absolutely. It's just valuation hasn't been cheap for a long, long time. And now it's actually getting more expensive as the earnings are coming in. So, I mean, you look at that and you think, man, is this the kind of market to pay this kind of earnings for a cyclical business? I don't think so, but our bull argument is that this is best of breed. It always has a premium to pay. And, eventually we're going to turn it around here too. And we're going to, the gaming and the metaverse and everything's going to be the driver, the crypto and all of that is going to be the driver. I'm not buying it, not buying the story. I think I'd still be selling the pop. We're in a little bit of the buy the dip mentality though. So the silver lining market will probably try to find a reason to buy it. I won't be buying the dip.
Yeah, I won't be a part of that camp either. It's just something that I think when you're seeing gross come down, you're seeing a lot of things pointing the wrong direction. Let's go to Snow now. Snowflake here, getting a big pop up. Let's go towards their earnings here. Snowflake EPS at a loss of 70 cents. Sales at 497.2 million, beating the 467.15 million estimate. Snowflake sees Q3 product revenue 500 million to 505 million and sees full year 23 product revenue at 1.9 billion and a high end of 1.91 billion.
The valuation on this one is absolutely insane. It's been insane for a long time. The guidance is fine. The quarter is pretty good. I mean, you have this, situation where you got so many companies missing. So when you get them beaten, they're going to get the pop. It's a nice 19% pop. It's a nice 30-point pop. It is a gift, in my opinion. I think there's massive resistance from 190 to 200. Again, sometimes you have to follow through on the day. I mean, we even saw it with Palo Alto Networks. We saw it with Disney for a few days. Sometimes they report good earnings, and natural people say, "I'm just going to short it." Nothing's ever easy. So they'll take it up higher, break those other shorts that just shorted on the print, make those guys shake out, and then eventually take it down. So you often see 2 or 3 days where you can get follow through. So does this have a date with 200? It might. Again, would I stick around if I was in this thing and it just gave me a 30-point gift? Would I, stick around for the last 10 points? Probably not. So definitely not chasing it. It's not a cheap stock. If we're going into a recession, you can have it.
Let's go towards Salesforce now. Next one up here. And this one, not as good as you can clearly see from the chart. Let's go into it. The numbers, Salesforce numbers here. Hold on a second. Let me make it as a banner. Moving bottom. There you go. All right. Salesforce here. EPS at $1.19, beating the $1.02 estimate. Sales at 7.72 billion, beating the 7.7 billion estimate. Salesforce announced a $10 billion buyback program. And they also started lowering on a lot of their kind of guidance. EPS lowered guidance, sales lowered guidance, and also their full year 23 adjusted EPS and sales guidance lowered. So Q3 guidance brought down, also full year 2023 guidance also brought down.
$160, 155 to 160. There's massive support down there. Stocks trade like 30 times earnings, somewhere in there. Last time I looked, it's not cheap, but it's not super expensive. It has had the growth in the past. I think you find support another $5-6 lower from here. So I'm not coming in and buying the dip on the first day. Is CRM one I would add to the long-term portfolio at a certain point price? I would. If the P got into the 20s, I think it gets interesting there. But P is still kicking around 30, like low 20s. I mean, you get to a market multiple on it, then it gets interesting. I still think it is one of best of breed as well. Obviously, so many businesses have come from Salesforce too. Benioff obviously has built an empire here to a certain extent. 155 to 160. That's your major support.
I don't know if that support will hold, but then again, you guys know software application names, those are the names that I'm probably the most bearish until we see a complete turnaround. We'll see what happens. Salesforce.
Well, that's Mitch. Yeah. That's the problem here is it still goes top-down approach, and it's hard to be a buyer of stocks when you're overall nervous about the overall market here again. So I just, I do want to buy some stocks. I raised cash. I raised it at some good prices, obviously. I was a little bit early with, some of my Apple hedging, but I sold a lot of other stocks in the last couple of weeks, and I'm back up to the 49%. I'd like to put some of that to work. Salesforce is one I would have on my wish list, on my list if it comes into a reasonable valuation, but it's just not reasonable here yet. So, and especially when the earnings aren't growing. And that's the bigger problem here. It's just like back to Nvidia. You're trading 25, 30 times earnings. It's okay when earnings are growing. But when earnings aren't growing or earnings are actually declining, that's not a math formula I want to add up to be long. So I think there's better places for your money, at least in the short term.
Let's go to Splunk now.
Splunkster.
SPLK. There,
Yeah.
Splunk. Adjusted EPS here coming in at a 9 cents, beating the 35 loss estimate. Sales at 799 million, beating the 747.55 million estimate, raising guidance. They see full year 23 revenue guidance at 3.35 billion on the low end, 3.4 billion on the high end versus the 3.33 billion estimate. So higher than the low end there. So good raising of the guidance for full year 23 on Splunk. But as you can see, this one, it beat, raised guidance, still came down.
I think it's similar chart to Salesforce, to be honest with you. You had all the support in May, June, and July, and Salesforce around 155 to 60. Same thing with Splunk. You had all this support around $88 from May, June, and July. So you get back down near that area, I think it bounces. I think the old supports, I think those May, June, July lows may hold on it. So it gets back down to that area. I think, you maybe take a shot. I think you might be a little bit early though here at 98. Wasn't there a company fishing around? Chat, you can help me around with this. Wasn't this stock in play at one time? Or did I dream that up? I thought somebody was kicking tires, or rumors were kicked around about a potential acquisition of Splunk. So maybe the chat can remember that. Maybe I dreamt it up. I'm getting older now, confusing dreams with reality. But I thought Splunk last year had somebody interested in it.
Don't worry, it might have been in the Matrix stream. Don't worry about that one, Dennis.
Well, we're asking the chat because I kind of
they always know.
I thought there was a rumor last year, so always keep that in mind. That's just a lesson on the side. I'm not sure if it's Splunk. I'd have to go looking on the history of the pro, but I thought there was some rumors there last year. Always keep in mind stocks that were at one time. Cisco was Cisco. See, they got it. Cisco was rumored to be a buyer here. Keep in mind those stocks that at one time had rumors that people were going to acquire them. As those ones come in, they're more attractive targets to put in the long-term portfolio because maybe they weren't buying with these valuations, but as they start to come down, there could be potential suitors. So keep that in mind. It was Cisco. Thank you very much, chat. That was interested potentially in acquiring Splunk last year.
You're getting some love in the chat. They're asking if you're open to adopting a degenerate adult options trader.
I'm not sure.
Yeah, Dennis is like, I got 2 kids.
I'm gonna leave that one out there. I ain't gonna comment on that one.
All right, let's keep going. Next one up, let's get into Dollar General, DG. I wanted to take a look at how these dollar stores were kind of performing. Let's take a look at their numbers here. EPS at $2.98, beating the $2.93. Sales at $9.4 billion, beating the $9.39 billion estimate. Dollar General board increased the share buyback authorization by $2 billion, raised sales outlook, provided guidance for full year 2022, expected earnings between $11.39 to $11.59 per share.
I'm this 1 second here. I got sidetracked.
No worries.
I'm torn on the dollar stores because I don't. These things historically do very well even in a recession. The one thing I'm scared about is that every single thing, and this is, again, just, thinking nervously about China, but every single thing in those stores comes from China. Like we get a lot of stuff from China in all stores. There's nothing in those dollar stores that isn't from China. So at least from what I can see, that's the reason they can sell the stuff for $1.25 or $2 or $3. There is nothing in there that's not from China. So if supply chain issues, if China starts to clog that up again, intentionally or not intentionally here, I don't think it's good for these companies. These things are all priced pretty much to perfection because they are recession proof to a certain extent. People will always shop at the dollar store more when they're hurting for cash. So in a normalized market, I would like to buy Dollar General and Dollar Tree if we were going into a recession. But if we have issues with China and supply chain issues, these things are like a ground zero too. So you know what? I'm staying away from DG and DLTR.
Honestly, in my eyes, are these dollar stores still even dollar stores? A lot of them are $1.25 or $2 a product now, and with
Well, I know they're not
inflation,
even dollar
they're
stores
not
anymore.
even dollar
It's
stores
so true.
anymore.
Can you get anything for $1 in the dollar store?
Yeah,
I don't
maybe a
know.
piece of candy
What
or
about
something.
Five Below? Did they raise their prices to $10 or
Yeah,
something? Is that still
they're
$5?
7 below now. You
Is
didn't
it
see that?
7 Below? They got to change the name of the company. They're going to change the ticker symbol to Seven.
Hey,
SEVN. Is it available?
that's just
Seven?
how
Oh
it
no, it's
is.
not. That's Seven Hills Reality. So you already lost that too.
That's pretty much what it is, isn't it? Let's go out of Dollar General. Let's go into Joel's not here, so we're allowed to do this. Let's go to Peloton. Let's get into it. Joel would not be happy right now if we were here
Well, it's
talking
not
about
his stock.
Peloton.
It's Lisa's stock. It's his
Oh,
wife's
it's Lisa.
stock.
It's
He
okay,
wanted
right?
to sell that stock since 120, and she
He
didn't want to
did.
sell it. And
He
it was
did.
her stock, and he was trying to tell her to sell it. So he actually kind of didn't mind it going because then he was right. It's $11. It's an epic disaster. I think, and I've said this before, I think Peloton is potentially a zero. I do. So I will not be buying this in the long-term portfolio. Can you trade anything? You can. It had the thing with Amazon yesterday. Do they find a reason to buy it on this disastrous report? Maybe. But I think when we look longer term, I think Peloton actually could be like $1 or $2. I'm not joking. I think it could fall another 90% from where it's at now. So let's write this down. It's $11.50. 2 years from now, not 2 days from now, because maybe you get a pop up 12, 13. I don't know the path to get there. I think 2 years from now, I think Peloton is trading under $2.
Okay.
2 years from now,
So
making
that's
that
like
call.
$9 lower.
So if you're a long-term investor in Peloton, I'm not on your side. I'm a long-term bearish Peloton.
I'm gonna say a takeout at 20.
You think it's going to take it? Who is buying that? This is
I
what
don't know
people were
why,
telling
but
me at
I feel
50.
like it. I still feel
Nobody's
like it.
buying Peloton. I said it at 35, and I was absolutely correct. The rumors broke. Spencer Israel was fighting me on it as well, saying, "Oh yeah, somebody will buy Peloton." It was $35. It was rumors on Amazon, a couple other suitors out there, and the stock popped like 50 or whatever, $40. And I
Yeah,
was like, that day, I was saying,
it was a
take
gift.
your money and run. I tweeted out that day, take your money and run. That nobody is buying this, and I had 500 messages back at me on Twitter saying how stupid I was. That and Peloton is going to get taken over by somebody here, and you're playing with fire by being bearish the stock. That was when the stock was $40. The stock is now 11. I was correct, and I expect all 500 of those people to apologize to me on Twitter today. In any regard, that's a joke, but in any regard here, I think Peloton, I think nobody, I think zero people are interested in paying for this dying business. And I think the better days are ahead of it. Unless we go into another pandemic, I think Peloton is going a lot lower eventually. Now, that doesn't mean it can't pop up. We're in the buy the dip mentality. Could come back here today. I don't know the path to get there. I'm saying 2 years from now, I think it's under $2. So let's put it in the calendar. We'll add the date. I'll even add the reminder here. 2 years from now, so we are now August 25th. So August 25th, 2024, Peloton is under $2. That is my call.
I'll take you to lunch, Dennis. I'm gonna give you some information here on Peloton's
You want to do a long-term
report.
bet here?
Yeah, I'll take it. I'll take the lunch.
Well, that's you got to give me odds. I'm saying the stock's going to fall 90%. It's a bold call.
I said 20.
Normally you say higher or lower from here is fair. So higher or lower, I would do a lunch bet with you, unless you give me 10-1 odds, because I'm giving 90% down. So I have to get 10-1 odds on it. 10 lunches to 1 lunch.
Yeah, that's a little bit hard. I'll get away from that. Well, Peloton, just to support your conversation there, Peloton has raised membership fees, hiked prices on some equipment, laid off thousands of workers, tested a rental option, exited the last mile delivery, transferred all production to third parties. I mean, they're trying everything they can here. So we'll see what happens.
They've got to try everything they can. Yeah. Nobody's buying the bikes. If you go on, like we have Kijiji in Ontario. Do you have Kijiji in the States? Do you have Kijiji?
No, I don't.
It's Ontario. It's a Canadian thing, Kijiji. It's like, localized Amazon.
Is that like an
whatever.
eBay?
You can go on there, or you just go Facebook Marketplace. Go Facebook Marketplace right now. Go to Facebook Marketplace and look how many Pelotons are available in your area. Used bikes. There's like 1,000 of those things for sale for a fraction of the price that they paid. You can get these Peloton bikes everywhere. I might just get one. I'll pick one up for like $500 probably, maybe even less, maybe $300. These things are everywhere for sale.
All right, now we'll get us some of the numbers that are hidden right now, the tape. Let's get into here. I still don't have my GDP number. I'm looking for it right now to give you guys it. The expectations here, estimate for the quarter over quarter was a negative 0.8 prior, negative 0.9. Also looking at jobless claims here, 253,000 was expected. Let's see when it hits the tape for me here. I don't know if you see it out there,
Down
Dennis.
0.6% versus 0.5%. Nothing, Burger. Market's hardly moved off of it.
Not even moving.
Not seeing much move at all. JG's got in the chat there too. Down 0.6%. So it looks like a nothing burger. We leaked a little bit. We leaked maybe 2 or 3 S&P points here. So not big movement off of this.
All right, let's go ahead. Let's just go into our interview today. I see Ivan in the background. You guys in the chat, give us a thumbs on up. We got Ivan Feinseth, partner and CIO of Tigress Financial Partners. Welcome back, Ivan. Oh, the old mute trick. So just check the settings at the bottom. Make sure you got your mic selected. Sometimes StreamYard loves to change up our selection for us. Give you a couple seconds there. Now, hey, interesting to see the SPY just slightly ticked there. Still in that tight range on the hourly. I'm looking to see if we're going to break out of that range. How we doing, Ivan?
How about now? Can you hear me now?
Perfect. Now. We got you, Ivan. How we doing today?
Very good. How are you guys? Thanks for having me on.
Interested in seeing the latest action. I feel like we've been kind of stuck in a little bit of a range the last 2 or 3 days. How do you feel? Break to the upside, break to the downside from here, Ivan?
I think the market's going higher. This is not a bear market rally. This is the next leg up. I think we've seen the worst. We saw the lows in June, and I don't think we're going back there or anywhere near there, because this recession that has had everybody in a panic is not going to come or be as anywhere near extreme of an economic slowdown as everybody has been feared. I think we are seeing this, if not a near-term peak in inflation, we are seeing a plateau, that the work the Fed has done has helped to somewhat slow things down between the moves, the increases in the Fed funds rate, the moves up in yields in the Treasury curve, and also a lot of the jawboning that the Fed and various Fed Chair Powell and various Fed governors have been talking about has all done what they wanted it to do. And I don't think the Fed is going to have to be as aggressive as everybody feared. I don't know if we get a pivot, but I don't think we want to pivot. We want to pause, or we want to a slowdown in the aggressive rate increases. I don't think we're going to get 75 basis points in September. I think there's even a possibility of 25, but in the worst case, 50 basis points, with Powell moving toward a more neutral, slower stance of being more data-driven.
Ivan, the one thing I love about you is you're consistent. You've been coming on this show for years. You've been bullish every time. You're bullish if we're right. You're bullish if we're pulling back. But it's kind of like the Warren Buffett approach. As the market goes higher, eventually Ivan's going to be right. If the market continues to drift higher, you're eventually right.
But it does go higher.
It's true.
I mean, if you look at even all of the issues that have caused the pullback in what we have seen, or in good companies, sometimes they stub their toe. Sometimes there's a shift in billing, like what Mark Benioff is saying, that companies are not slowing down their IT investments. They're being a little more cautious, a little more measured, and he thinks that what he doesn't get this quarter and next quarter, they'll get in the future. So I think that the trend is still strong. The retailers, sometimes they call it wrong with what consumers want to buy. We saw this big shift from before the pandemic, from experiences and travel during the pandemic to merchandise, as people were sheltering in place, fixing up their place, buying things to learn and work and entertain and eat at home. And now they can go back out. So we're seeing the shift again, spending on travel, spending on apparel, spending on makeup, luggage, things like that. And by the way, not all the retailers, just like the apparel manufacturers, they don't always call the trend right in what consumers want. So they discount what they can't sell until they sell it and move on to the next season, to the next trend, until what next the consumer may want. And that happens all the time in retail. It's not the end of everything, not the end of retail. It's not the end. It's just a next phase in an ongoing continuum.
The one thing you have working in your favor is the consumer mindset, which I will say has changed. I mean, pre-COVID, people are still cautious with their spending. They're looking, as savers here. Seems like post-COVID, it's like this YOLO, like you only live once, and people are more rah-rah to actually spend their money, which has obviously been a driver for inflation as well, as,
Yes.
people are getting out there and doing things.
The other sad thing is this is not a demand problem. It's good. You want healthy, strong demand. It's a supply problem. And in theory, if we never had the pandemic, we would have never had the issues of the break in supply chains, the shutdown of factories, and the shortages of things. So that has been and this chip shortage that has driven disrupted the car market and caused a huge spike in used cars because there's not a lot available because people aren't trading in cars because they can't get the new cars they want because they're not available because they're waiting for chips. General Motors last quarter had to furlough the delivery of 95,000 cars while they wait for chips. It's crazy. But if nothing else, the lessons learned that we need to not be so dependent on a China-based supply chain, that we need to have chip production here and in other places, that we need a diverse supply chain and we need to build things closer to where they are consumed, and the more expensive an item is, like a car and a refrigerator and things like that, need to be built more locally.
Ivan, I couldn't agree with you more. I think we do need to get away from that dependence. My concern here is in the short term. I mean, if we can start to build things more in North America here again, my concern is there's going to be a lot of short-term pain because right now we're addicted to, cheaper labor, which obviously the labor is so much cheaper in China. So does that mean we're going to, if we start building things here, prices are going to have to go higher here again? So you're going to have to get used to.
Not necessarily, because there's the total cost of production.
Okay.
And labor is only one input into the cost of production. And by the way, we are very competitive labor-wise. We're also better. The shipping costs are lower. The manufacturing costs overall can come down. And so there's a lot of other factors to the cost alone. Not only labor is a big function, but over time, as developing countries become more developed and industrialized, the labor rates go up too. We saw it. The United States of America started out as a labor colony for the UK. We produced textiles and apparel and sent it back to the UK. And then, over time, as we became more advanced, we started to export labor to Asia and then to Latin America. And Asia also exports to Latin America. So at one point, people exported to Japan for production and then became too expensive to produce in Japan. Japan outsourced to other Pacific Rim countries. And it's just an economic nature that money flows from countries long capital to countries long labor.
This guy's good. I'm trying to punch holes in this bull thesis here, and he's got the answers here.
And by the way, with this thing, there are people who are willing to pay more, including in the Toby Keith song, for things that are made in the USA. So,
aren't you fighting the Fed, though, to a certain extent, if we're saying, that we're not going into a recession, that the demand is still strong? I mean, Fed is intentionally trying to kill demand. How do we bring down inflation if we don't knock demand back?
I really disagree that the tools, if you will, I don't think, to a point, the low interest rates and the almost zero interest rates did help increase valuations of a lot of high growth tech stocks, and that we are seeing an adjustment in. But we need to use technology to increase the production of goods and services, as well as food. There's food inflation, energy, and unfortunately, one of the biggest components is energy, and this big spike we saw over the summer in gas was painful. But by the way, Disney had a record park attendance and record ticket prices and record in-park spending during the quarter that we saw that huge spike in gas. And by the way, the majority of people going to the parks in Florida and California drive. So they were incurring the higher gas costs, but still willing to travel and willing to spend money. And I think there is a rethink of consumer priorities in spending. That spending on travel, spending on experience, maybe is part of that YOLO mindset, but being with family and doing things is being more valued than just buying more stuff, of which people have a lot of stuff.
Now,
So, go
Ivan,
on.
now one thing that's concerning me now is this recent run that we're getting here in oil. Now it's starting to show up a little bit more. Seeing Exxon now at 98, almost 100, and we're starting to see mentions of cutting production from OPEC plus. Another concern too is natural gas. Do you think that inflation has truly peaked?
Well, I think that pullback in gas was helpful. And there's a lot of fear of going into this winter. There's expected shortages of natural gas in Europe. And I don't want to get into the political aspect that the whole energy process has been politically mismanaged in a lot of countries. But that is a factor and is a concern. But I think that the trend in oil is still lower, but it dropped pretty fast. It dropped from 133 down to 87. It was great. It's going to bounce a little bit. Look, there was a time in March of 2000 where it went negative, and everybody just sat there, watched their computer, and watched oil go. How could it be negative? I mean, it's in theory impossible, but we know that the derivative market and people just, clicking the sell button did that. But in near term, I say markets are very inefficient, but long term markets are efficient. And I think that we will see oil, settle down at least below 100 is a good safe point. But the economy and consumer spending, even when oil spiked, didn't come to the screeching halt that you thought it would. And that spike in oil, it is painful when it went from costing people $40 to $60 to fill their tanks to from $60 to $100+ to fill your tank. It is painful.
All right. Now, one thing is, we can clearly see you're kind of in a bullish sense here. Now, what opportunities should we be looking at in a market when we're getting a little bit of a dip right now?
Tech and consumer. I think that the weakness that in Nvidia right now, and even if you look at Salesforce, Mark Benioff said spending is not coming to a halt. It's just being a little bit more measured, a little bit more cautious, and people integrating things and spending a little slower. But it will catch up over time. It will recover. I think that a lot of the negative news is pretty extreme in Nvidia, and I think that is marking a bottom.
What about value? Well, what about valuation for Nvidia? We were just looking at this before he came on the show, and I mean, it's trading, 39, 40 times forward earnings here at this point in time. It's definitely not cheap. It's a cyclical business here. I struggle to pay. I know Nvidia is best of breed, but I struggle to pay that kind. Can it grow into that? Is it going to grow into that?
Just look at what Jensen Huang said last night about the auto sector. That's going to be their next billion-dollar-plus business. Still, chips, AI chips to power data centers for drug discovery, for healthcare, genomic mapping. I mean, there's a lot of opportunity in new areas, and that's what you're buying. You're buying the opportunity in new areas of where, if you will, the puck is going to be, and where Nvidia is going to be in the next few years. And it still is all about the data center driving the computing power to the edge, AI, automotive ADAS systems, and the movement from level 1 to eventual level 5 autonomy. So there are a lot of growth opportunities for Nvidia, and they are on the forefront of every one of these secular, very powerful computing trends.
Let's go the opposite, and let's go to Intel, because this thing is in the absolute gutter. The valuation is cheap. It's been a value trap here. CHIPS Act should help Intel, you would think.
Absolutely. But not only the CHIPS Act, but everybody wants to invest in creating U.S.-based and other parts of the world-based semiconductor production. Plus, the spinoff, the IPO of Mobileye is going to unlock a lot of value. Mobileye is profitable. Mobileye is got all of the major auto manufacturers, as does Nvidia, for their processors, for ADAS systems and automotive control systems. So
would you be buying Intel here at 33?
Absolutely. My favorite, I like the chip sector. My favorite chip stocks, number one is Nvidia, number two, Qualcomm, Skyworks, Qorvo, and Intel.
It's a good list.
All
What
right,
about other
nice
sectors?
list there.
Let's jump over to other sectors. You're giving us some good stuff here, Ivan. And stick with technology here. You talked about Salesforce a little bit too. What other technology stocks do you like?
I like Salesforce. I like MongoDB. I like Monday.com. I like this no-code, low-code hosted database opportunities. I think, again, there's tremendous value. You look at Monday, it's a low-code, no-code hosted database that starts as little as $8 a month and can go, and that they still have some of the strongest growth is in the plus $50,000 paying a month customers. So they are being adopted by early stage small businesses as well as very large businesses. And MongoDB is also there. They are getting more entrenched. Their fault tolerant database is being adopted by more and more larger companies. They have partnerships with all of the big cloud service providers. So I like both Monday.com and MongoDB.
Some great stocks there mentioned by Ivan Feinseth. Appreciate you coming on and not only talking macro with us, also going into some of the micros, giving us some outlook of what you're seeing out there as opportunities. Thank you for coming on today, Ivan.
Thank you for having me. Always great to be on with you guys.
Thanks, Ivan.
Thank you. All right, that's going to do it for our interview today. Let's get into the last couple of kind of headlines that we have. And interesting, let's take a quick look at the market. Looks like we started to leak a little bit. Yeah, we're starting to leak there. One of the things that I've been focusing on is this hourly range that we've been in. And this is an hourly chart. Look from pretty much Monday. We had a high there at 417.23. Yeah. And we just ticked over it in the after hours. It went to 417.91, but we're right back into the range. So in my eyes, this is one thing that I'm really keeping watch on. I need the SPY to go either way, because either way will help me. One of the things that's the hardest thing to do as a trader is trade between the chop when you're going sideways in consolidation. So I'm going to call out levels like 411 or 412 below or above, let's say 418 for the upside. Those are the levels that I'd be looking for on the SPY.
I think you're just going to have chop here, though. You're in the dog days of August. We're going to have a lot of chop here in the next couple of days with Jackson Hole. So you've got a very, and just, even Ivan as an example, or myself as on the opposite end of the spectrum, you have a very divided market here. You have people who are full on, believers that we're going to come back, we're V-bottoming, and everything's going to go back to business as usual. And that might be the case. But then you have other people that are like, well, this is a little more serious. We've never seen inflation like this in the better part of 40 years. They're going to have to battle this for a while to try to get this back down. And that might put us into a prolonged recession. I don't think it's a question whether, we're going to recession. We're kind of in one. I mean, from the last, two stats, we know that, the technical definition, obviously we've hit that. So, I mean, it's just a matter of whether it's going to go, it's going to be a really quick one. We're going to bounce back very quickly, or is it going to be prolonged? I mean, it's going to be, the bounce back quickly, the Fed's going to have to basically lose here. I mean, I don't see how you can have it both ways. I don't see how this market can just rip roar, and prices are going to come back in, from an inflation standpoint. I think the Fed is trying to kill demand. I think it's going to slowly do it. And I think it's going to show up in the corporate profits. And, if we keep getting the silver lining market, maybe stocks can go higher. But if they start killing demand and and the earnings start going down, the stocks just aren't cheap enough. And I think at the end of the day, I believe what Ivan said is, the long run markets are more efficient. So I think we saw short-term inefficiencies here for a while with, the rah bull 2021. Now, I'm not saying I think Ivan will be right in the long term. I think 10 years from now, I've got to believe stocks are higher, or I would not own any stocks in the long-term portfolio. But still, my job as a market timer is like, are we out of the woods here, or are we still in the middle of the woods? And I tend to still think we're in the third or the fourth inning of this thing. I don't think we're in the eighth inning, and now we're going back to the bull market here. So I'm on the opposite end of the coin with Ivan. That's why we have a market. I'm still going to stick with my bearish thesis that there's a lot of things to worry about here, and I'm a seller of rallies.
I kind of have to agree there until something changes, at least in inflation. I think you need to see multiple months of inflation coming down. That's why tomorrow, of course, that's why all eyes will be on personal consumption expenditures, the PCE number that we will get tomorrow at 8:30. A lot of eyes will be watching that. Even Jerome Powell's eyes will be watching that, right?
Oh,
He
for
has a speech
sure.
2 hours
Mhm.
after that, an hour and a half actually after that. So you could just imagine that could change his speech up. And so I think that, he already has mentality of what he's going to speak about. But of course, he's looking at the focus number for the Fed has been mentioned multiple times is PCE, not CPI. CPI is a number that we all tend to look at and the media tends to look at, but the Fed really hones in on that PCE. So watch that tomorrow as it hits the tape 8:30.
That's big. That's big.
Yep. Now, Bank of America coming in today and downgrading some of the housing stocks. It's interesting.
Sure.
Lennar taking a hit down here. Also, KBH also getting a downgrade. Let me get you those price ratings here. I was just taking a look at the calendar here. Looks like we got a downgrade here towards 34 on KBH. And for Lennar, price range is downgraded. Don't think that's correct. It has 82 there.
Either way,
82.
yeah, I don't care. The price
82
targets,
is the price target.
the price targets are absolutely meaningless
Yeah,
to
they're
me on
just
all
put
of
them
these
out there.
things. They're just spitting out numbers. What
Mhm.
matters today is that the fact that they're downgraded. It's interesting. You get the toll report. The dip got bought. So obviously Bank of America's coming in here. Was Bank of America downgraded?
Yes.
Mitch?
Yeah.
They're looking at this rip was just to be sold. So they're selling rips here too with this call. Toll Brothers, ridiculous rally there yesterday, so it's coming back down. I mean, it's still in a range. You're still significantly off the all-time highs in Toll Brothers, which is 75. So the question is all the bad news priced in? I think there's more to go. I think the value trap still. I think the home builders are going to struggle here as supply chain woes are still happening. Like I talked to my Windows guy. I told you that story there 2 days ago, where he's like out on certain windows. Obviously, you can get some windows. You go to Home Depot and get a window, but I mean on certain custom windows that they're doing. On the one, they're 14 months out. On some of his custom windows on certain different types, and he's like, I've never seen that before. We're usually 4 to 6 weeks, and they're telling me they were telling me 4 to 6 months. Now we're looking 14 months out on some of this stuff. He says the supply chain for him is definitely worse than it was. The concrete guy, and this is in Ontario, maybe it's different. The concrete guy said, I've never seen anything like this. He says, I will take the year after COVID over this year any day of the week. He's like, it's getting way worse. He's like, it's from a supply chain perspective. Now, I don't know if this is just the building industry or if this is across other things. All I know is, like I said, I'm kind of getting a firsthand look where I'm waiting on a fridge, I'm waiting on a stove, I'm waiting on 2 front doors. We're so used to 2 years ago just getting things, it shows up in 6 weeks. It's just not the case here anymore. But the concrete guy says, I've never seen this big of a mess here. Trying to get, his product. He's like, the supply chain, he says, is absolutely a mess for him. This is his business. He's got a concrete business, sells concrete, been in business for years. Says, I've never seen it this bad. So I don't know. Maybe it's just his business. Maybe the supply chain is just unique to him. But I was tweeting out last night and people are telling me the same thing. They're waiting on stuff. My parents waited 4 months for their John Deere riding lawnmower. It just seems like it's across industries, this waiting. And people will wait. And people, will, eventually the products seem to come. But the supply chain is just far from fixed. And we have this, belief that the major supply chain issues are behind us. And that's, going to be, now it's going to be supply chain and stuff's going to open up and that's going to bring inflation down. And I think it's wrong. I don't think, and I think China can screw it up a lot more if they want to. And don't, discount that as the wild card. That if China's going to fight us in a political battle, it's not going to be with guns and with nukes. It's going to be in that supply chain, and that stuff might start showing up eventually. So there's a lot of things to worry about here. Why am I paying 20 times, S&P multiples when they're not, when it's not cheap historically with all these problems out there? That's why I raised cash up to 50% of my long-term portfolio.
We'll see what happens with the housing stocks. Will it take another step down? And supply chains, of course, the major concern. Now let's go towards, I know that some people were thinking maybe SoFi would get a big rip. I'm all out of this. I just want to let you guys know I did add
Nice
into
trade,
yesterday. I was able to take a little bit of a profit into the 685 range when it was going to that 687. I took a little bit of profit there, but I wasn't able to get the whole piece up to 7 and then eventually stopped out break even. And I think that's always an important thing to do sometimes is give yourself a shot for a catalyst really to kind of drive something. But sometimes things are going to flip, right? You just don't know, especially when you're dealing with catalysts. SoFi eventually came down here towards those 640s, breaking down at the end of the day, but it's right back up here. I'm wondering, what do you think about this stock now, Dennis?
I don't know. I mean, it's so beat up. You can go and you're trying to call a $6 stock. It used to be what, a 20? Where was this thing at the all-time highs? $27, $25 here. So they get the lift from the student loan stuff, Biden talk. I don't know. It's just so many bag holders and something like this. Like get over like $7-8, maybe it starts to get interesting. It's hard to build a bullish thesis if you don't start getting above 7. Because even from a technical base, you could argue like the head and shoulders, like July, August, a little bit of, the left shoulder and the head up there at $8. Now you're back building the right shoulder here again, which isn't a bullish, signal here at all. And I just think there's bag holders all over the place here. So when there's bag holders, it means there's overhead supply. So it's hard to really see that thesis to drive to $8, $9, $10 unless we go into this wicked short squeeze market again, which obviously from looking at Bed Bath & Beyond, it hasn't been working, at least in the last few days.
One that's just catching my eyes that I'll watch to see if it does move with this is Slum here. I'm not saying that it will move, but it's just something that I'm keeping on watch. Let's go to some of the uranium plays. Did you see some of those make moves yesterday?
No, I
Dennis?
wasn't paying attention to them. What's up?
Really big moves there coming from some of these uranium plays. Whether it
Give me
be
a couple symbols.
UEC, triple
URA,
URA,
CCJ. I follow Cameco.
Yeah, we can do that URA, which is an ETF, right? And I mean, this is one that's just giving us the insight. Look at the last 2 days, really strong daily candles.
Yeah.
Now pushing on up. What's driving this? Honestly, I think it's just a push back here. And you're starting to see kind of like steel tick up. I saw Cleveland Cliff make an announcement
Commodities
yesterday.
are on the comeback.
Yeah.
The commodities are all on the comeback here. If you see any commodities that are in the gutter or haven't really participated yet, there's a catch-up trade here. Cleveland Cliffs, maybe there's a catch-up trade here. You can see commodities, steel obviously. You can see, oil has come back strong, and now you're starting to see some follow through into some other stuff here. So the commodity trade is interesting here because we've had the significant pullback. Supply chains are all still screwed up everywhere. I mean, CCJ, we looked at 2-3 days ago, that pullback was obviously to be bought. Now it's, goes from 22 to 27. I mean, you're right up here at 28 resistance. So, I'm not going to come in here and buy the thing when it just popped 20% in a day. But, you get pullbacks here. I think commodities are still the better play here right now.
Looks like they're talking about Japan reopening plants for uranium, and that's why you're seeing it kind of get that lift. Some nuclear energy talk out of Japan. I'll take a look at that, Jay Rice. Thank you in the chat for mentioning those kind of items. We can't catch it all.
Interesting too. The one downside here is if you think you're going into recession, the cyclicals will suffer the most. So it all depends. You can get some pricing, get some relief here. It's hard to get rah bullish. A lot of these in a lot of these stocks, just for the simple reason is that I do believe that we're going into recession if we're not already in one, and I think it's going to be a good one. So it's hard to just jump on, the rah bandwagon. But if you're using oil as your leader, oil has been coming back here. So some of these commodity stocks that are beat up, not looking at oil, but even a CCJ from 2 days ago, find some other ones that haven't went yet, because I think the commodity trade is getting hot here again.
Really nice levels starting to break out from Exxon, Oxy. I mean, I was watching 95, 95, 95. Now we're all the way up there towards 99, looking like we want to get through that 100 and make another run.
On the road to 100.
Yeah, on the road. And Oxy also making big leaps on up there towards 75 now. I mean, we went through that high there in June 31st there. We're up and above now.
Warren driving the bus here. This gets back down to the mid-60s. He'll buy more. Everybody realized they have the Warren put. Again, it's 10 points higher than it was 4 days ago, so I don't want to chase it here. But on pullbacks, like I said yesterday, we haven't got a pullback. I said yesterday, if we get pullbacks on commodities, on the oil stocks, I'd be a buyer.
Yeah, I'm looking for a pullback somewhere close to 71. There's a monthly resistance there. We'll see if it acts as support when Oxy pulls back or not. All right, that's probably going to do it for us. It's 9:01. Let's take a quick look at the SPY, see where it's going. Still in between there. Got a little bit of bounce there. Anything you're watching for the SPY today? Overall market, Dennis?
Just overall market, expect more chop. Obviously, Jackson Hole, Powell speaking directly to the markets tomorrow. So there's, going to be a lot of chop here as we get lots of Fed speak here the next couple of days. And Fed is still driving the overall bus. We always look for drivers. The Fed has been driving this bus for a long time. If they say anything dovish to a certain extent, like saying, well, let's see how this PC deflator comes in tomorrow, but if they say that, the markets can rip. If they start getting more hawkish and saying, no, we're sticking to our guns, we might go a full point or something. Somebody might say that in September, that would spook the market. The market wants to see 50 in September. I don't know if it's going to see 50. I don't know if it's going to see 75. I don't think it's going to see a buck. I tend to think it's going to see 75. But, let's see if we get some clarity here from Powell here in the next couple of days.
We'll see what happens. Tomorrow will be a big, big day for the markets. And have a great one, Dennis. We'll let you on out of here.
Okay, thanks, everyone.
All right, we're going to go start wrapping on up here. Pre-market prep, like always, where you guys get all the information you guys need to get ready for your trading action. Hope you guys had a great morning with us today. Now, stick around. We do have live trading up next. We've been doing really well. We're going to watch a lot of those uranium names. We'll watch some oil names and, of course, some of those meme stocks like we always kind of follow on live trading. So come on over if you want to continue trading with us. Lord Ryan, Zunaid, and I are ready to go back at it. It's been a pretty good 2 months for me. So I'm going to continue trying to battle through. I'll see you guys over on live trading. And please do me the favor, hit that subscribe if you're not subscribed. If there's some reason you're watching pre-market prep right now and are not subscribed, you're missing out. Hit that subscribe so you can be notified the moment that we go live. I'll see you guys next time right here on Pre-Market Prep.